Good morning, good afternoon, good evening. It's great to be here. My name is Paige Scott. I lead the North American asset management practice for Kingsley Gate Partners, and I am joined by my colleagues in Asia Pac and Europe. I'll hand it over to Thomas and then to Alex.
I'm Thomas Coe. I lead the financial services practice for Asia Pacific, and also very happy to be here.
And I'm Alex Howard-Keys. I'm in London, and I'm part of our financial services team.
It's great to be here. On the topic of the day, ESG in private markets. What's driving it? How did we get here? Why now? The three of us are going to talk a little bit about our personal and professional experiences working in this space. And I thought I'd kick it off by first just talking a little bit about the journey that I've been on professionally with ESG, and then pass it around to Thomas and Alex to also touch on their experiences in the evolution of ESG in private markets. My journey professionally started 5 years ago when I conducted my very first ESG search. And of course, this was actually in more traditional liquid asset classes. As you may know, in North America, ESG has been a laggard relative to Europe and even in some parts of Asia and Asia Pac. The opportunity for us was in equities initially, and again, long only equities. And that was just as a direct response to, hey, we think we need to be doing something here. We're not really sure what it is. And that experience, that opportunity really opened my eyes to how very little there is known at the time, this is again 5 years ago, about ESG talent and how very limited the talent pool was at the time. I published a white paper, just really kind of expressing my experiences having gone through that search process and what I discovered along the way in terms of the definitions of even talent being so dramatically different from one firm to the next. And so we kind of created these buckets of talent from ESG kind of 1.0 to deep green ESG 3.0. And of course, that's now come a long way. And we've now seen this rise of ESG in private markets, which again has lagged a bit in the US. We've seen that take off in elsewhere around the world. I'll pass it to Thomas to talk about his experiences in the evolution that he has seen professionally in Asia Pac, and then of course, Alex.
Thanks, Paige. Well, I think the challenge speaking to Asia Pacific
is that if you look across the range of different disclosure frameworks and the broad range of different reporting requirements from a regulatory perspective, depending on jurisdiction, it's a huge patchwork. And you could take Australia and New Zealand, particularly the superannuation funds that have had, even pre-Paris Pledge 2015, pretty extensive reporting requirements for infrastructure and large real assets. So there is a high degree of sophistication, which can be quite easily, well, perhaps not easily, but can be ported over to private markets more generally. And so you have a ready talent pool helping LPs think about their strategy in ESG. It's a very different position in some other markets. So if you look at North Asia, Japan, Korea, China, all are very much playing catch up over the past year in developing their own frameworks, their own guidelines, and the talent crunch there is extreme. If you look to Southeast Asia, particularly Singapore and Singapore linked pools of capital, they have taken a very proactive approach, certainly since 2017. And as Singapore positions itself as an ESG hub, we've seen a massive influx of particularly sustainability strategy talent, as well as investment professionals. So there's a range of different levels of sophistication, different levels of thinking, and also pools of talent. And I think increasingly we're going to see a flow from Australia, New Zealand, potentially Singapore, and see a high demand in particularly, I would imagine, Hong Kong and Korea Seoul, but I think to a lesser degree in Tokyo, where the LPs particularly have been slower and perhaps a little bit more conservative in their uptake. Private markets generally, particularly ESG thematic private market strategies. So it's a very diverse picture, but there's definitely talent there. It'll be interesting to watch the flows as they continue. So Alex, please.
Yeah, in many ways, Europe, I suppose, was the first mover in terms of sustainability, ESG impact, and quite often led really by some of the large pension funds, the more sophisticated pension funds in the UK and Scandinavia and in the Benelux, many of whom have been looking increasingly for private assets to go into their mix and their quest for yield. And so that's been a bit of a driver. But taking a bit of a step back, I kind of see this as a confluence of two megatrends. One is the rise of private markets as a whole, and the other is just this inexorable growth in ESG, partially driven by regulatory change, SFDR in the EU, but also that has kind of driven investors, LPs, also the borrowers, portfolio companies, to, for the first time, to really be seeking guidance and help on what all this means. And it's kind of hard to keep pace in many ways with all of these changes. And so they need help and guidance. And I think the fourth thing is just the growth of ESG-led activism. There are very high-profile instances not too long ago of engine number one with ExxonMobil, admittedly outside of Europe. But all of these things together, I think, mean that we're seeing kind of the confluence of these two megatrends, private markets, ESG, coming together for the first time.
And to punctuate and build on what we've just said, Alex, just from a numbers perspective, if you look at the Preqin numbers over the last 12 months, you see a 36% increase in ESG found in private capital AUM, with at least 3.1 trillion AUM committed. I mean, that's just astonishing numbers. So there's no doubt that this is serious, and it's a serious business. I think from a macro perspective, a lot of this also is the confluence of regulators, like you say, Alex. Why do the pension funds care? Well, the regulators have kicked in, right? And Europe has always been on the forefront of the regulation around this, and the pension funds have been very happy to oblige. If anything, it's almost like they want to outdo each other to see who can be more sustainable and more impactful. And then the money managers, whether you're private capital or liquid capital, are scrambling to figure out how to support those mandates, right? So it's, again, not surprising that you have all these things. And of course, the sort of umbrella of that, having really germinated with the Paris Climate Accord, and in countries sort of politically and geographically responding to that, right? So why don't we shift to maybe a discussion around some of the regional nuances, which I think are, you touched on it a little bit, Alex, and Thomas, you've touched on it too, in terms of even flight of talent, but maybe we could talk about what seems to be, when you think about ESG, what does the ESG kind of really mean in your region? Alex, I'll let you kick this one off.
Sure. So again, I guess Europe having been the first mover, the G part of ESG has been with us, as in all jurisdictions really, for a long time: proxy voting, stewardship, etc. The E part was really the growth, the kind of the font of growth for the last few years, with a lot of participants creating dedicated climate-related funds, broader environmental, etc. But over the last 24 months, we've seen much more momentum picking up on the S component, the social, which traditionally, the investment managers, etc., had shied a little bit away from. But we're seeing big growth in areas like social housing funds, funds which take considerations of human rights or alleviating food poverty or gender pay differences, etc., far more into consideration. Again, going back to those large pension funds and some of these investors, these are increasingly the sorts of products which are very well received by them. So we're seeing this big explosion of growth and innovation, particularly on the S side.
Interesting. Thomas, what's happening in Asia Pac, would you say, between those three?
It's interesting because governance in a private equity context
has long been a competitive advantage in Asia, because depending on the jurisdiction, there are widely differing requirements and quality of corporate governance. So I think that's always been a consistent theme within private equity and private markets more generally. I think environment continues to be one of the core drivers, I would say. I think given the number of government pledges towards net zero and the knock-on effect that has in terms of regulatory environment, but also GPs very quickly, I think, and really showing remarkable agility, adapting their fund strategies, their fundraising strategies, and looking to incorporate environmental sustainability into their, not just as risk management, but into the core value creation proposition. It's been very, very interesting to see how quickly that shift has happened over the past few years. From a social perspective, impact investing has long been around, particularly Southeast Asia, South Asia, but there is again a degree of complexity, because depending on the market, depending on the local culture, social can mean a wide variety of different priorities. So it's less homogenous, but environment and environmental sustainability, net zero carbon really are the key drivers.
Yeah, and I would echo very similarly. When you think about the fact that over 200 countries have pledged carbon neutrality by 2050, you don't get there by waiting to get started on those initiatives. You start now, right? So I would absolutely 100% say that in North America, it's interesting. The focus initially when all of this came out, several years back, the idea was, oh yeah, of course we're doing ESG, but we're particularly doing the G. And if you talk to liquid money managers who obviously publish track records and are very open about the way they are proxy voting occurs, you can see that they would make the argument that they've been very focused on governance, and their proxy voting would sort of underscore that, right? And of course, there's been even more attention to that of late. But the reality is, the governance has certainly been around for a long time. I think the bigger headlines, to your point, Thomas, at least in North America, have certainly shifted to environmental and again, that carbon neutrality. So when we talk to any sort of money manager now, be it a private markets firm, traditional, liquid, money manager, the focus very much is around climate and carbon neutrality and launching funds that are carbon neutral oriented strategies, be that in real estate, be that in ag. And then of course, from a PE and private markets perspective, it's how do we impact the portfolio companies and their desire to become more carbon neutral or more green, if you will, whether that's just, different elements of that. I would even say subsectors that we have seen in the space have been also really interesting, and specifically those subsectors within kind of that E have been energy transition, waste, and water usage. So you'll start to see themes like that also kind of happening within traditional liquid managers, and again, the mandates that are being pledged by some of these private markets firms and their portfolio companies and the investments they're making. The social piece is just really starting to kind of come up onto our radar in North America. Again, we've always lagged Europe. And I think the social piece of it is more specific to how asset managers, be it, again, private markets or traditional managers, how they themselves are governing, their diversity, equity, inclusion initiatives. Is their investing matching their internal objectives of DE&I, or is it kind of one-sided? So there's a lot more focus on and diligence questions, frankly, RFP questions coming from asset owners around what are you, the money manager, doing to sort of align to ESG versus just the investment piece of it itself and the outcome around investment piece. So I think connecting the dots internally and externally is going to continue to be a major theme. And you start to see now heads of impact and sustainability, being promoted and elevated, within some of these companies for that reason.